But there we go. All right. Well, welcome to the Friday afternoon live event called Core PCE this time. Now, this is the last time of the day that we broadcast for the news events at 12:30 UK time, because, of course, our clocks go forward in the UK this weekend. So then it'll be back to the usual 1:30. And then, of course, the 5 hours time difference from New York is there. Okay, great. Pin the market. Good to see you. Good to see you, Tom. Good to see you in the house. Alexander. Good to see you. Good to see you as well, Sophia. Loud and clear. Okay, so what I intend to do now going forward is basically to maybe come on during these sort of big sort of key economic events and hopefully make sense of it all. We'll talk a little bit about what the data means, what it implies, and then, of course, we'll be on the charts as well, looking for some trading opportunities. As always, I just have to put this up. I know it's really boring. No disclaimer. This is not intended for investment advice. Okay, we've got quite a lot to get through before the actual announcement at the bottom of the hour. Howdy, Mac. Howdy to you. Good to see you in the house as well. That's a good point, actually. By the way, let me know where you're coming in from. Let me know your level of experience. Always like to get a bit of a feel for the viewers that are watching me, so I know where to pitch this going forward. As you do know, we do the live week ahead stream every Monday at 1 p.m. UK time. And that normally gets quite a good following. So it's good to see people coming in now, but it's also good for us to know exactly where we're beaming to in the world. It really is useful for us. And obviously, as I say, the level of experience. Okay, so this is PCE. Okay, PCE, it stands for Personal Consumption Expenditure, Atlanta, Georgia for Mac. That's on the East Coast. Okay, so that basically is my squawk, which is real time. Because you're watching me over the internet, there's a few seconds delay. So when you hear that announced at the bottom of the hour, chances are you're going to see it on the price action before you see it or hear it coming out of your speakers. So don't think you're hearing it first just because of the delay or what have you. Okay, but there you heard the estimates, up 0.3% from up 0.3% last month. Which basically equates to year-on-year of 2.5. So core personal consumption, what is it? It's basically inflation. Okay, now it is the main measure of inflation that the US Central Bank, which is the FOMC, the Fed, it's the main measure of inflation that they use in determining their path of interest rates. Now, you may think that a lot of the other central banks, they use CPI as their main guide for inflation, CPI, Consumer Price Index, but the core PCE is deemed to be sort of more inclusive, a better gauge of actual prices. Core CPI last time out, a couple of weeks ago, I think it was, came in lower than expected. So they look at this. But I don't think this is as important this Friday afternoon as it's been in the past. Nonetheless, we're still streaming it live, so it's still going to have hopefully a bit of relevance. But it's not so important, because I think what's really, really important, what is going to drive the markets more than any of this, is basically what happens next week on what they're deeming, what they're calling, was it Liberation Day? I think it's called Liberation Day, when Trump is about to divulge all the tariffs that they are going to be implementing. That, I think, is having more of an impact. It's one of the reasons, I think, why the gold markets have been on a surge higher over the last week or so, well, a couple of weeks. Well, actually, we're on all-time highs, so forever. But there's one of the reasons why we've had this sort of big burst going on in the gold markets, basically because of this sort of tariff thing. It's one of the reasons why stock markets have been reasonably sort of flat this week, marginally lower, the Nasdaq slightly lower, but it basically is ahead of the the Trump tariffs. But ordinarily, these numbers are important. Okay, we've got non-farm payroll next week, but ordinarily these numbers are important. If inflation is coming down, then it basically means the Fed are able to potentially cut their interest rates. And if they cut their interest rates, we hope to see, or you should expect to see, the US dollar trade lower, and therefore, well, stocks will go higher. If interest rates are generally low, it tends to mean that stocks become more favorable because you can borrow money to invest in the stock market, considered to be risk on and so forth. So normally, if it's a low number, and I think if indeed it does come in below 2.5 today, one of the bands there was 2.4. If it comes in lower than 2.5, 2.4, you most probably can expect to see the dollar come under a little bit of pressure. But as I say, it's really more to do with with what's going on next week. The main currency on the planet that we will tend to trade over these news events, if you're trading news events, is the euro against the US dollar. You can see here what the dollar's basically been doing this week. Basically, the dollar's had a reasonably good run. Maybe that is coming to an end. We've seen the sort of, of course, as the euro gets stronger, it means the dollar comes lower. But this last, say, what's this? This last since Monday, a couple of weeks ago, the euro has been getting lower, which basically means that the dollar has been getting stronger. So the dollar's been enjoying a reasonable run. If the numbers come in lower than expected, you can expect to see this reverse. You can expect to see the euro push up and the dollar trade lower. That's really what should be happening. Whether it does happen remains to be seen. The way I always like to trade these numbers or any real big sort of market moving numbers is to basically have a game plan beforehand. So I'll tend to have an overall bias, wait for the markets to move towards my bias where my pending orders will be set. At the moment, I think it's pretty clear that the big run you've seen in the euro weakness, it looks as though it's come to an end. This, of course, is a level of significance now that I think markets will be looking at. Okay, I'll be more inclined to see a pullback into this zone, and I think it really will need something quite substantial for the dollar to continue trading lower, which most probably would need a read of maybe 2.2 or something like that year on year to see the dollar trade lower. So I'm pretty happy to think that this level here around the 1.08 level, a good round number as well, could hold this for the sake of this afternoon. After the announcement, by the way, I'm going to go through a lot of the other sort of asset classes that we look at and look for potential biases in there as well. Remember what I'm saying to you over this stream. These are purely my opinions. I don't want anyone going off and trading these. These are not live trade signals. We don't do live trade signals. It's not the way to, I don't think, to make money long term. At the end of the day, trading is about exploiting an edge over time, not looking for the fast, quick buck by taking a trade just because I say so on a stream. So don't trade on the back of that. Gold up or down? Says the late investor. We're always late to the market. Are you? Gold up or down? I'm long gold. Okay, on a proper count. I am long gold at the moment. Following the trend higher, we actually had my profit target set this morning or set overnight at 3,095, and it got up to 3,085, I think it was, and then it rolled back up. I will be. It's one on one of my prop accounts, but I will be. My personal view is all to do with Trump and his game plan. My personal view is that gold is coming to a bit of a short-term top. That's my opinion. So I'll be looking to potentially, get out of my position long gold over the weekend. ahead of what we call Liberation Day. Where is gold as we speak? It's most probably 3076. Yeah. So this is gold at the moment. I'll be looking to liquidate my profits beforehand. But we'll look more so at that after the news announcement. Okay, we got Joseph Perez in from Dubai. That's good to see you in there as well. Yeah, stocks have been trading lower again this week ahead of Liberation Day. I don't know. Do you not think that's maybe priced into the markets? Maybe stocks have got some moves to the upside. Again, I'll look at that in a moment. And also, by the way, if you want me to look at anything over this session, make use of it. I'm going to be on for maybe just 30 minutes, 45 minutes in total on this session. Of course, I'll be back on Monday. But do make use of this time by letting me know anything you want me to look at. I basically have two real strategies that I follow in my trading. I have done pretty much since I came onto the screens in 2005, having spent many years, of course, in the trading pits. But I really trade two main strategies in my day trading. One is trend following, using what I call a boomerang. That basically looks to get into a trend on a pullback. The boomerang comes back to you. And the boomerang reversal, which is on the higher time frame charts, looking for reversals at key liquidity areas. Okay, pin the market. We'll look at the DAX 40 in a minute. I'm just going to turn on the squawk. Okay, so you'll hear it come out of the squawk in about 30 seconds. As I say, do not trade it, but let's have a quick look to see how it is going to affect our most actively traded currency pair. And of course, that is the euro dollar. Remember, a soft number will see a weaker dollar, which means this will push higher on a soft number. There we go. One, two, three. Bit late. Bang in line. It's bang in line. Whoa, all unfair. Yeah, look, there's nothing in these numbers. There's really nothing in these numbers to get excited about. First coming on, of course, I'm chat with you guys, but I didn't expect it to be a big firework movement on the back of that. Let me just turn them off for now. I think we've heard all we need to hear on that. It's basically going to be pretty much of a dull event. Let's have a quick look at what's happening in the stocks. That's the index. Let's have a look at the stocks. Down here, we've got the nothing. The Nasdaq is trading slightly lower. You've got the S&P 500 maybe trading. I'm looking here at the bottom three. Yeah. So you've got the S&P 500 now maybe trading lower. Okay, I'll tell you now. I talked about my boomerang reversal. This potential here is a structural point on the sort of midterm range, the 4-hour time period. The reason why I'm saying that is we've had this move with higher highs since pretty much the middle of March. Higher highs, higher lows, higher highs, higher lows. We come into this level of presumed liquidity, which is presumed now because it rolled off it. Okay, pulls back to previous break of structure, pulls again, fails to take out the new high. This is now a pivot point where I would expect to see if prices break, we could do not trade it, but this is the way I'm just talking about my boomerang. We could expect to see a break of structure, stops above the failed swing high, profit targets down to there. You get about a 2-to-1 on the back of that. You move your stops in as it goes. Again, nothing's going on. I personally have a fundamental view of what we can expect to see into next week, which doesn't necessarily support the technical view. You know, when you're trading the markets, you've got fundamental views and you've got technical views. You know, it's great when the fundamentals align with the technicals. It's great when that happens, of course, but at the moment, I think the technical view is that we trade lower, but the fundamental view for me is that we trade higher. I'm a technical trader on the day charts. My investments, my fund investments, of course, they're more fundamental views. I don't trade my funds and longer term stuff on what the charts are doing. I trade that based on balanced portfolio and and a longer term sort of profile. But short term view, the stocks could come under pressure. I personally think, as I say, that the stocks, we know what Trump's all about, don't we? Trump is all about the deal, the art of the deal. And this Liberation Day has been so much in the markets. It's been so much talked about. He's making it into such a big event. We know that he, likes to negotiate. Tariffs are set to be announced on Tuesday. He did auto tariffs this week ahead of Tuesday. Doom and gloom. It's why the stock markets have come off. It's why the gold prices have pushed higher. I don't think Tuesday is going to be as bad as he said. I don't think it's going to be as catastrophic as he has basically implied. Why would he let the markets know ahead of time what he's going to be doing? He's letting them know ahead of time, in my opinion, so that he could turn up and maybe get some negotiation. I think he's meeting Carney this afternoon as we speak. I think he might be meeting the Canadian president, prime minister, I should say. So they're talking, I think, this afternoon. Any good news will obviously see the stock markets, pull higher. That's why, I think what I'm trying to say here is that the bad news is almost baked into the pie. Okay, buy the rumor, sell the fact. You've all heard that expression before. So I think the bad news basically baked in. The risk to reward on the back of that means you've got to buy it. Okay, what more bad news can come out? Okay, he puts tariffs on. Hang on, don't we know about that? Don't we know he's putting his tariffs on? Don't you know he's just put on 25% on cars, autos? Don't we know that he's putting on tariffs on Canada and Mexico and China? I think it's in the markets. Yeah, steel. The steel tariffs from a couple of weeks ago. It's basically all there. So what more can he do? The only thing more he can do is give some good news, which is why I think fundamentally stocks will most probably have a little bit of a bounce into next week. There you go. The tariff is the major market determinant right now, says Pin the Market. Yes, absolutely. I mean, I totally agree with you. I don't know if you've been listening to me. Pin the Market. The tariff is the major market determinant at the moment. It is. That's basically what's driving the stock markets and driving gold. Just while we're on this story I'm talking about, okay, of buy the rumor, sell the fact, basically buy the stock market. The same thing, but in reverse, really can be said for gold. Yeah, I mean, gold has had a fantastic run to the upside, just trading slightly higher as the stocks come under a little bit of pressure. As stocks come under a little bit of pressure, we're seeing gold push to these all-time highs. The reason why gold's trading up so much, not only do we have a lot of central bank buying, central bank buying is certainly being rumored to be quite pretty strong coming out of Asia. The weaker dollar, of course, helps the helps gold go higher, and the dollar has been reasonably weak. Although it's had a good week, but again, gold has been driven here as a bit of a safe haven. Yeah, gold's basically been seen as an asset class that's sort of away from the turbulence of uncertainty. Typically, in times of uncertainty, you see risk off assets perform better. Risk off assets are placed things like gold, and that's exactly what's happening at the moment. So if Trump next week delivers something that's not as bad as was expected, this gold is going to top out ahead of 3,100 as far as I'm concerned. I mean, I think we're getting pretty close at the moment. Last night the high was 30.86. I mean, obviously there's nothing really up here in terms of chart points that you can sort of pin as a target level. You may have like a 50% extension level. I think maybe so you might have something like this zone here, where we broke out. Okay, this has proven to be sort of the previous high. Okay, if we break out and continue higher, well, the next level of resistance is most probably going to be that distance again. So you've most probably got that up there as the next target point. So you've got a target of maybe 3160. Often you'll see. I'm not a fan of Fibonacci. I'm not a fan of well, I say I'm not a fan. I don't use Fibonacci, but I do use the 50% and 100% extensions. They just have some uncanny reason of always being, sort of target zones. Certainly when you're in this place at the moment where there's just, blue sky, if you like. So that would be a target. If this level here, at 31, what is it, 31 sort of, sorry, I beg your pardon, 30 sort of 60. This is where you had the break of structure. If you're back to test this zone, that's where you'd possibly, look for a boomerang trend continuation trade. So back to there, and then off we go again. Often when you see, this level here, 30.50, known as for you smart money traders, SMC level, break of structure. Yeah. Often when you see these key breaks of structure, and literally we fell off it, 60 odd bucks last time, breaks through. When you see this break of structure, you'll often, don't quote me, do your own back testing, but you'll often see them retested. So I think, if you were to be trading gold now, taking away all the macro news, you've got your profit target at the 100% extension. You've got stops below the swing low. You've got a 1.8 there, in what is 1.8 risk reward. Yep. So you're making $1.80 for every dollar risked. You have your stops below the swing low, which led to that swing high. And in what is a predominantly strong trend. Okay, and this trend has been basically going up pretty much since Trump was elected. Gold will hit 3,100 today. I don't disagree with that, actually. I think you might find it fall just a little bit short. I'll be getting out, as I say, ahead of the close tonight of my. I'm marginally in profit. Where am I? I'm break even now. I'm in at 30.45. So that does okay for me, and I've moved my stops to break even now, but I'll take my profits later. As a Canadian, the tariffs are freaking me out. Yes, well, I mean, if you live in Canada, the Canadian economy, basically, I think there's 60% of the Canadian export market is just over the border there. Jobs, economies, businesses, they all rely on getting product into the US, auto as well. I think oil is, look at oil in a second, actually. But I think, it should, it's scary, not just for Canadian citizens, but it's scary all over. I mean, look at all the car manufacturers around the world. Interesting, with all these auto tariffs, one of the companies that's doing really well are the car rental companies like Hertz and so forth, because they have a whole big stockpile of used cars. And of course, the used cars are going to be much more in demand if there's tariffs on imports. So it makes sense, doesn't it, that all these companies that have a whole bunch of fleets, auto fleets, are going to do well. So oddly, there's always an opportunity when these things happen. You've got to be wise and nimble to find the opportunity. But yeah. Here we go. Andrew, what's your idea of a long euro dollar is working out since the news? It's working out since the news, long euro dollar. I don't think much is going on, but let's have a look. Is it working out? Euro dollar is, yeah, it's pretty. I mean, it's pretty tight, isn't it? I mean, I don't think much has happened. That's just the 4-hour chart. But if you drag that down to the nothing really. I don't want to bore you too much, but I just want to show you something that I always look at. Okay. And it's basically this tool, which is something that you can get for, it's a CME group. So just type in FedWatch tool onto, see FedWatch at the top here. Just type in FedWatch into Google, and it comes up with this. It basically tells you what the futures market is expecting in terms of its interest rate moves. I know if you've been following me for a few years now, you'll know I talk about this all the time. To get a gauge where you think the euro dollar is going or the dollar is going, it's worth looking at this. Let me tell you how to read it. The current interest rates in the US are 4.25 to 4.5%. Okay. And at top here, you've got all the different Fed meetings. Okay. So the next Fed meeting, follow my crosshairs, follow my mouse, is on the 7th of May. Okay. 7th of May. There's an 87% chance, actually, there's an 87% chance that rates will still be at 4.25% to 4.5, i.e. that and that being the same. There's an 87% chance that rates won't move. There's only a 13% chance down here that they'll cut rates by 25 basis points. Okay, so then we take it out to the June meeting. Okay, that's when the futures market, which tend to get this right, and the Fed, I know, watch this. There's then at the June meeting, there's only a 37% chance that rates will be at the same price. 37% that rates will be unchanged. Well, that's 37. That basically means 63% chance that they're going to cut rates. Now, 63 is not really that conclusive. But if over the next few days you see this increase, i.e. the Fed fund futures increasing their bets on a rate cut, you're going to see the US dollar trade lower. So that's why I like to use that as sort of like an early indication, also a bit of a backup, bit of confluence supporting the technical views. Okay, so if rates are going to go lower, then you expect the US dollar to go lower. We'll see how this gets affected on Liberation Tuesday and again at the job numbers next week, next Friday. You've got the non-farm payroll. Ordinarily, I'm going to be streaming the non-farm payroll each week as well. By the way, we're going to have giveaways. We're going to have competitions giving away assessment accounts and so forth. But unfortunately, next Friday, I'm actually speaking at the Trader Show in London. I'm actually hosting a panel of prop traders talking about the prop industry and so forth. So I'll be at that event in London next week on stage with hosting that event. If you're in London and you want to pop along, I think we're on about 9:30 in the morning. It's the IX show. You can go and check that out. If you want to turn up for that, come and meet me in person. I'm happy to shake your hand and buy you or get a free cappuccino from the stand there. I think I'm told I can have free cappuccinos all day because I'm a contributor. So there you are. Gold will hit 3. Yep, got that. Gold will hit 3-1 today. What do I think about the pound against the Japanese yen? Good question. If you ask me that, and I'm completely blind, I go and have a look here. This basically tells me what I should be looking at. It tells me which currencies are strong, which currencies are weak. At the moment, the white line is the British pound. It's the strongest currency at the moment. It's taking the brunt out of what's really weak. Not a lot. Canadian dollars weakening up, the purple line. That's the 4-hour chart in general. So I go to the daily. It takes a couple of seconds to work out. This, by the way, it's my momentum meter. Well, we said this last week, didn't we? For the last 2 week ahead streams, the Japanese yen, you can't basically give the yen away at the moment. The yen is under pressure. Pound is looking reasonably strong. I actually think the pound is a reasonably strong currency, generally speaking. I actually quite like selling the euro and buying the pound. But you mentioned the Japanese yen. For me, at the moment, before I get onto the charts, my bias, so I'm just creating a bias and I build a picture down from that bias. My bias at the moment is buying pound yen. Okay, so that's just by looking at really strong currency on the daily. Yen's weakening up. This little kink at the end means there's a bit of a pullback going on, which maybe is an opportunity to buy pound yen. Then I'll have a look at the 4-hour chart to see indeed if whatever. So yeah, you still got pound strong, and the yen, as I say, is having that pullback. So I know that the pound yen is going to be coming down a bit at the moment. In the last, say, few trading sessions, maybe that's an opportunity. So once I've got my top-down analysis approach, I'll then go to the chart, and there you have it. This is the okay. So what do I think about that? Well, this is clearly, as I say, when you see, I'm just going to go back to here for a second. When you see, can I draw on this? How can I draw here? Can I draw on this? Let me see. Ink to go. Bear with me a moment. My drawing tool. So the idea of these streams, by the way, is to not only give you my views on the markets, but also give a bit of education. When you see, for example, this pound at the moment trading up like this, let me get a bit thicker. But when you see the pound trading up like this, or one currency trading up like this, and the other currency trading like that, that is an indication of a strong trend. When you see one of the currency pairs moving in the opposite direction, like the yen at the moment, high here, that is an indication that a pullback is going away. The pound is still strong, hasn't really been affected by this pullback. So that basically gives me the confidence to continue with that trend. If you see both currency pairs converging, be careful of that one, because it could be a trend direction change. Okay, if both currency pairs are moving in on each other, could be a trend change. If they're moving, converging, diverging away from each other, then that's a strong trend. So at the moment, the pound is still strong. The yen's pulling back. That is a buying opportunity for that trend. Okay, so here we go. Look at the pound yen again. Okay, this is a buying opportunity. This is a structural break. This is a good, again, I'm not going to put up the disclaimer because I trust you all grown adults in here. You understand that this is not investment advice, but this is a trading opportunity for what is an established uptrend. Strong pound, we know that. Weak yen, we know that. Yen's having a bit of a pullback. It's not the pound that's pulling back, it's the yen that's pulling back. We pull back into structure. This is a level clearly that the markets, the institutions, the bigger players are looking at. Quite a good currency pair to trade as well. They are the top. So you've got the dollar, euro, yen, and pound are the top 4 currencies. So you've got the pound and yen. A lot of volume follows through the pound against the yen. So that's why I like that currency pair as opposed to trading the Aussie Swiss. Who the hell is trading Aussie Swiss institutional wise? Well, maybe the Australian bank is or what have you, but you get the gist. More volume is flowing through this currency pair. Trade reasons amongst other reasons. But this is putting back right into a level of liquidity. See, last time we broke out through, okay, we broke out through back on the back yesterday, came back. Remember what I said? Breaks of structure are often retested before they continue on. So the break of this structure, which is the previous high, pulls back. So it broke up to 195.50. It pulls back into the BOS, the break of structure, before it continues. We're now back into it. This is a good level. So where is your stop going to be here? Well, you always want to play stops where you don't think you're going to get hit. But my strategy that I tend to tends to determine where I place my stops is basically at the swing low. In the case of an uptrend that led to that new swing high, my stops are going to be below that. With the thought being, so that's basically the strategy entry. So you're pulling back into the previous highs. That's your entry point. This is the swing low that led to the swing high. Point being is this established uptrend is likely, if we see a break here, to be over. And I don't want to be in this uptrend if we're seeing a structural break of it. This is on the 1-hour chart, by the way. So obviously it's fractal. You can trade this on any particular time frame, but you get the point. A break of this structure would be construed as potential reversal territory. So I'll be out of the trade there. But at the moment, it's a good entry, or it's a possible, well, it fits in my strategy. That's what I'm saying. And I don't want you to trade this now. If you've just traded this and you're watching me and you've placed your trade on your account, prop account, or whatever, then I think you want to give yourself a kicking, because that's not how you trade the markets, by following one person's view on one particular market. You've got to trade a strategy that you know works for you over time, that you back tested, that you know has a slight edge, and you know and you fully accept you're going to have a whole bunch of losing trades as well as winning trades. You're just taking one, it's random, totally random. If you're following an edge, it plays out over time. Hopefully you've got the idea of that. So I mean, it's difficult really in terms of, let's just drill out to the higher time frame chart to look for profit targets now. Okay, so profit targets, I'm going to take a look at the higher time frame chart, the 4-hour chart, to see where we go. Let's have a look here. Well, I don't think you've got much to worry about in the terms of resistance. Really, I mean, it's not. I mean, obviously we've got these levels up there. I think this level there around that zone is where this currency pair will be looking, or institutions will be looking. They'll be reassessing here. There could be orders up here. This move lower was created by decent selling. Okay, there could still be pending orders up here where these institutions want to get out, where the big money wants to get out. So once we get up there, you may see it pull back. So I think anything in here doesn't really give me any scares, doesn't really give me a reason to think that it can't be surpassed. I call these roadblock levels. I don't see a roadblock really up to around 198. So on a risk to reward basis, bearing in mind we've just had this pullback to this structure, and now I've zoomed out on the 4-hour chart, it goes back to this level again. Look, so this is a really good level. I'm pleased to. Who asked me this? Pound yen. That was from Cristiano. Thank you. I think this is an interesting currency pair, and I've just cited my reasons for that. You got your short trade, your short stop. I beg your pardon. You got your stop at below 193.5. Profit targets next level. You got predominant trend with you. You got a decent size stop. You got 2 to 1, 2.5 to 1 risk to reward on the trade on the higher time frame charts. This is all, as I say, fractal. You can do this on any time frame, this analysis, depending on what type of trader you are inclined to be. Do you mind if I just ask? Oops, daisy, my mouse is running out of battery, I think. Okay, question for you. Because I'm just reasonably new to streaming around here, FTP. Drop that. Are you currently taking an FTP challenge? Just a bit of a survey. Again, I want to know who's tuning in. I put the link into our Discord. So I know a few people have come over from Discord. I'm trying to gauge the people in Discord. Are they actually in our assessment challenges? So please let me know as well. This information goes nowhere apart from in here, so I know the type of trader ultimately that I am talking to. So if you can let me know that, I would appreciate it. Yes, good, Cristiano. Absolutely hearing different point of view, and it's just the way I analyze the markets. Everyone is different, and everyone should be different. But you need to do your analysis, what works for you. Please post the link here. Sorry, Pin, what link do you want me to post? Cristiano is a prop trader. Well done. What link do you want me to post? Please, sir, post the link. What link do you want me to post? If you want to... if you want to take one, you can QR code that takes you to our site where you'll see all our assessments and so forth. If that's what you're talking about, I'm not quite sure what you're talking about, but you can scan that, or I think it's going to be in the chat as well. You can click that link that takes you to the site. And of course, if there you go, things you've tuned in, there's a 15% discount code there on this program, Experienced Trader program. You can use that 15XPER and you get 15% off the 12.5, 25 and 50 programs if you are so inclined. I'll just leave that there for a minute. Right, yes, so thanks for that one. What's the other one? You said the pound dollar. Pound dollar as well. I spoke about this on Monday, and that's why I've got this drawn in here. This is a structural break. Again, we haven't broken yet. You would be looking to short this at this structural break with stops above the swing height. Hasn't broken yet, but if it does, will be the level. At the moment, I can expect to see that level up there. I certainly wouldn't be taking longs into 130. 130. I just sit on my hands on this. Okay. Hardest trade in the book, sitting on your hands, but honestly, it's going to be one of the best trades you ever do. Only take the trades when they're aligned with your strategy and your analysis and so forth. I jotted down here things I wanted to look at. The DAX oil is one I wanted to look at. Let me have a quick look at oil here. Some of you don't look at oil. Not the UK. I want West Texan oil. Okay. This is a funny one, right? Oil at the moment. Economies are under pressure, as we know. We've got risk off at the moment. Risk off means people are becoming more protective. Economies are concerned about economic growth. The US, even China, tariffs, overcapacity in China. That's been talked about at the moment with Alibaba or what have you. What is it? So there's oversupply in that economy. Oil, maybe because of tariffs, oil has been driving higher, but we're coming into what I think is a level that you may see as a potential reversal. Okay, so this is a zone that I think is a bit like what we looked at a moment ago. What was it? Can't remember what it was, but anyway, so this was a pivotal point. Bounced off it a number of times, broke through, back out to retest, broke down, back out to retest. Okay, so this zone here, and again, this is not a fib level, but I'm using the fib tool. Okay, I beg your pardon. I think so this is the fib level now. We've just broken through the 50%. 50% is the level that I always look to see if it holds. It hasn't shot out through with any real velocity. This zone in here now, I think, is coming into, see this double bottom is coming into potential sell zone. So if I'm trading my reversal, boomerang reversal, I would look for levels like this, and then I'll look for confirmation on the lower time frame charts for my entries. Stops above that zone. So again, it's a reversal, trend follower by day, reversal on the higher time frame charts, but you look for, the higher time frame levels, but you look to time your entries using the lower time frame. So at the moment, we are reasonably well finding consolidation at here. Markets are looking at that zone. It's the previous low. It's between the 50 and the happens to be the next fib level, which is the it's not that way around, but it'll be the, what level is that? I beg your pardon. That's going to be what is it? It's the 69, is it? Yeah, 69. And you're seeing consolidation around this zone. So look for price action to see if it does indeed respect, but then for a potential reversal down. So oil fundamentals could drive it lower. Technicals certainly coming into a resistance zone fundamentals. Remember, if you see the fundamentals aligning with the technicals, you're in for a higher probability trade. So come up to resistance, test resistance again, fails to take out the previous high. That's your potential reversal pattern right there. Very, very simple. I think I said, I say on these streams, like the smart money concept theory has been out for certainly decades. Wyckoff came up with the smart money sort of analysis, back in the late 1930s, 1928, I think it was. But it's becoming sort of a bit of a trend thing. I've been trading this since I came onto the screens, pretty much 2005, 2006. So it's just basic price action. The chart tells you what traders are doing. I don't know what that is. Charts, tell us what traders are doing, and we tend to have the tendency to repeat ourselves, don't we? So there you have it. Right. Let's have a look. The link to the Discord survey he mentioned. Okay, that's the link to the Discord. And are there any gifts in the broadcast? Stay tuned. I can't read that name, to be honest. I don't know your name. I don't mean to be. I just don't speak Arabic. But today we haven't. But these events are going to have little perks along the way. So make sure you tune in. The idea of the broadcasts is to share with you my 35 years of trading experience, having spent 25 years as an investment banker in the City of London, wearing that jacket. Actually, you'll see over my shoulder there. I spent 25 years throwing around hundreds of thousands of dollars on a daily basis for institutions. Spent 2 or 3 years, 2 years at the end of my floor career trading my own accounts, known as a local trader, when I used a red jacket, and now on the screens since 2005. So the aim of these streams is to share my knowledge with you guys, to get you start thinking like traders. We want to find decent traders out there. If we can find decent traders, we all make money. You may have seen recent podcasts on with one of our traders. Watching him closely, he's doing very well at the moment. We want to find more people like Raj, who's I think he's up to 110 grand profit at the moment, something like that. I haven't checked his account. We haven't checked his. Well, no one's told me. I don't check daily, but I get indications. Yeah, he's doing really well on a. This is in profit. You can withdraw that out tomorrow if you wanted to. We want to find decent traders. My purpose for doing these is to hopefully get people thinking like traders, but we will throw the odd gift in there as well from time to time. But the purpose of these events is not to just throw away lots of gifts and what have you. I actually want to try to give you the trading experience. Red jacket like a stick broker. Like a stick broker. I know what a stick broker is. Is actually my red jacket is actually being framed at the moment, so you will see it on the wall behind me at some point. So there you are. Right, folks. I'll leave that there. It was. I only wanted to be on for about 35 minutes today because I know it's a Friday afternoon and people will have got other things to do. PCE, as I say, normally it's a market mover. Inflation numbers. It's what the Fed look at to gauge our interest rates. It looks by looking at that Fed tool, we may have 2 interest rates to come between now and the end of the year. That will change, and of course the dollar is going to react on the back of it, and so will the stock market, and so will gold and other asset classes. Okay, so we've got big day on Tuesday to look forward to, Liberation Day, so make sure you stand by your beds on that one. And that is great. I'll be here again on Monday for the week ahead live stream. We'll have a link on the channel right after this one. I'll schedule that one in, or the team will schedule that in first of all. So I'll see you on Monday at 1 p.m. UK time. Pin the market says, oh yeah. I used to be a stock jobber. Do you remember the old days? I used to have let me show you. Do I have it here? No, I haven't got it there. One of my books. I used to work on the London Stock Exchange with those hexagons. Oh, here it is, look. This is the Gilt Edge Market, London Stock Exchange. Do you remember the hexagons? I used to work there only for about 2 years before I went on to the Futures Exchange, and I was a futures trader. I worked for Swiss Bank, Warburgs, Lehman Brothers before. I had nothing to do with the Lehman Brothers crash, by the way, before you ask. But I worked for Lehman Brothers as well before the crash as well. What's my educational background? Cristiano, I left school. Here's a true story. I left school with absolutely zero education qualifications. Okay, much to the annoyance of my late father, who wanted me to go on to university and all that nonsense. I didn't have anything. I left. I wrote off to. Let's tell you a little quick story before we wrap up. Then I wrote sort of well before we had, had to write them all handwritten, before we had photocopiers and all that stuff. When everything was in black and white, and we relied on fax machines. Most of you don't even know what a fax machine is, I know, but I wrote to all the London Stock Exchange firms asking to get a job, and I think I must have written about 50 letters. 2 wrote back to me, called James Capel and Ackroyd and Smithers, and they offered me a job, Ackroyd and Smithers, and I went there as literally a tea boy. Literally getting tea, getting the prices off the dealers in the evenings, all the dealers, all the graduate dealers, all Oxford graduates and Cambridge graduates. I didn't have a qualification to my name, but I was asking all the dealers questions, and normally everyone would shy away from them and wouldn't speak to them, but I was asking all the dealers questions. One of the dealers there, called Alan Pausch, said, "We want you on the London stock, on our floor, on the trading floor." So I was promoted very quickly onto the London trading floor, where all the people I was working with, I'd say, were university graduates, and I was there with nothing. So no qualifications at all. I did do maths when I was 13, but that's just that was just because I was quite good at maths at the time. But that's just a GCSE or O levels at the time. So there you have it. I've gone on way too long there. If you liked it, I'll see you, I guess, on Monday. And why not share it with your friends as well? We want to create a sort of a vibrant community here of like-minded traders, all with one aim, to have fun and make some decent money. And if I can share my knowledge to help you in that plight, then I've done my job. Okay, folks, have a good one, and I'll see you on Monday at 1 p.m.